Cryptillians and crypto crackers, today is still Monday, August 16th, 2021. I am posting an altcoin video. Also, it's more of an old school altcoin video where I critique my own trading, things that I've done wrong as I go through the assets. I'm going to have tags in it. You can watch it on ×2 speed, but I'm also posting that today. So if you're more of a Bitcoin person, not an altcoin person, and you're fairly new to this channel, I would go check out the other video that I've uploaded today. Maybe look at the tags that interest you most, watch it on ×2 speed. There's some fairly valuable information in there, up and above, doing price predictions on how amazing and high things can go up to $1 billion. So go ahead and check that out. But right now we're going to dive into Bitcoin and let's get after it. So what you're seeing on this chart right now is I'm on the Bitcoin chart 12-hour. And what I have done, these lines that I've drawn in, so you see how I have EMAs pop up, disappear, pop up, disappear on different, and I have a 3-year-old sitting next to me eating an apple and playing with Barbies. So just a heads up, my gaming computer, the PSU, went kaput. So I'm not out in my office right now. But anyway, so I have the 12-hour chart pulled up, and I've gone on to different time frames like the weekly, right? And I've drawn in where the weekly 10 EMA, the most important EMAs are. However, I'm really liking the Bitcoin 12-hour chart right now, and the Ethereum 8-hour chart. So what I do is I try to look at those two charts while drawing in the EMAs from other time frames. Hey, I know you like to sing, but try to eat an apple without singing. And this is what we're staring at. So as you can see here, the 4-hour, let's even go down to a smaller time frame. Let's go to the 1 minute, or 1 minute, 1 hour. And as you can see here, the 4-hour 89 and 55 have been getting things right. So this purple line, as you can see, is labeled the 4-hour 89. The blue line is labeled the 4-hour 55, so on and so forth. However, looking at recent price action starting, let's say here, this 89 got this right. And I've been saying that the move is losing steam, right? Because the pushes up this is big, smaller push up, smaller push up. However, one thing to the contrary, if there's a more bullish case for going past 50K before any type of correction, is that after the first push, Bitcoin relative to the 4-hour chart corrected more severely down to the 89. Which the 89, as you can see here, is lower than the 55. But after that, even though the pushes are getting weaker, so is the bearish sentiment, or the sell pressure. The sell pressure is not even getting priced to the 4-hour 55. So there's a little divergence in what I'm seeing here. The relative strength is decreasing, but it looks like bears aren't stepping in. I don't know. It doesn't look like sell pressure is great enough to... It looks like Bitcoin is going to make another push up, maybe to 52K on very low volume. And then probably correct, I would guess. But as of now, the 4-hour chart, that's what it's telling me. Based off the fact that based off the fact that you can see this was the biggest push from 31.6, or, actually it went down to like 29, but closing it daily at around 31.6, whatever. And this was the biggest push. The biggest push went the lowest. The smallest pushes have also been met with the least amount of sell pressure, staying the most bullish. And you can see here, the distance above the 4-hour 55 is actually increasing. And its sell pressure is actually waning even more than what the buy pressure is waning. So the 4-hour chart is not looking that bad. So if you want to skip the 4-hour RSI here, I'm going to take off the RSI and only leave the moving average of the RSI, so you can see what I'm saying here. Oh, this is the 1 hour, sorry. Boop. All right, so 4-hour RSI. I'm looking at this mountain and this mountain. So a lot of times when moves are waning, and before you get a 15 to 30% correction, sometimes only 10% correction, you'll have two mountains of 4-hour RSI EMA. So this is the EMA, not the actual RSI. So the RSI is green and goes a lot faster. You have two different mountains where it forms bearish divergence via the mountains. So you'd have a trend line, something like this. And not only do you get 3 strikes of bearish divergence in each hump itself, 3 strikes here, 3 strikes there, but the move down doesn't happen until the 3rd strike on the mountain or the EMA of RSI on the 4-hour. So you end up actually getting 9 strikes a lot of times. And so Bitcoin is only on the 2nd mountain, and it's had 3 strikes here and 3 strikes here, but the 3 strikes played out and Bitcoin only went down to like 37.4. So it almost looks like if this were to push up, it would have a 3rd mountain of bearish divergence before things cool down. So bearish divergence means the heights are going lower. You have lower highs, but higher highs on price. So if I could flip the price now, the highs are getting higher, right? So your trend line is up, but on RSI, the trend line is down, which that's the definition of bearish divergence. So the 4-hour chart is saying it wants to give another push. I personally don't want it to give another push. And I don't know. I would like to think it's not. But the 4-hour chart works a lot. And let me show you these 3 strikes that I was talking about here. If I can, yes, use my brain for a second. So this height here was a high in price. Price spiked up and it made another high, which was a lower high on RSI. So again, a trend line going up on price, but a trend line going down on RSI highs, right? That's bearish divergence. You had 1, 2, 3 strikes. 1, 2, 1, 2, 3. Go to price. Go to price. Go straight above here. 1 high, higher high, higher high, as these are making lower highs. So you had 3 strikes. 1, 2, 3. And that's 1 mountain. That's pretty common of the 4-hour chart. That's why I love trading the 4-hour chart. It works almost the same on all assets. And I'll show you Verasity here in a second. Even though this is not an altcoin video, I'll show you that Verasity, I think, made 4 mountains, for example, of 4-hour bearish divergence. And Bitcoin really could do the same. I mean, hell, it could go up straight to 60K doing the same thing. I want it to go down, but I don't know. It doesn't look like it's gonna. On the 4-hour chart. Other charts are going to say something different. And then you have another push up. You have the highest high on RSI here, so go straight up. You have a high in price, a new high. Then the next RSI push, about right here, is lower than that one, but the high is higher. So you actually only got 2 strikes, because this did not make a higher high even on a wick or anything. So you had 2 strikes. Anyway, you have 2 mountains of bearish divergence on the 4-hour chart, embodied by all of this move here and this RSI here on the 4-hour chart. Now, a case that, you know, the 4-hour chart is definitely saying go up. I don't think the 12-hour chart and the 8-hour chart are saying that, or maybe even actually the daily chart is. So you have your middle time frames, which I'm about to show you, are saying one thing, and they're different than the lower and the upper time frames, which are bullish on both sides, but the middle time frames are saying, So the middle time frames, if you can imagine a tug of war match, right? Bunch of big sweaty men, just imagine them on both sides of a rope pulling, right? The middle time frames, like the 8-hour and 12-hour, that's as if somebody were in that, not participating in that tug of war, but rather standing in the middle, watching the rope just go and not move. Right? So they're deciding, like, it's just going, maybe the rope's moving back and forth, but it's almost like the judge, like, which way is it going to go? And once it goes that way, I will flip to judging that way. And that's what the 8 and 12-hour are doing relative to the 4-hour, which is bullish, the daily, which is bullish. But the 12 and 8-hour are saying, correction's happening. So we're at an interesting disparity where it's not just the lower time frames that are saying, let's say, down, and the upper time frames are saying up, or vice versa. A lot of times the daily says, yeah, things need to correct, but the lower time frames, like 1 to 4 hours, say, no, we're going up for a little bit, right? That's a common disparity. But right now what we have is we have the lower time frames saying up, the longer time frames, especially the weekly, daily, are saying up, but the middle time frames are saying correction. All right, so that is kind of what I'm going to cover in this video here, is this idea. But going to Verasity real quick and sticking with the mentality of the 4-hour chart before we flip to, let's do the two bullish things first, and then we'll go to the middle time frames, the 8 and 12 hour. So Verasity here, great project, by the way. I do not own any of Verasity again yet. I took my 3.8x and ran, unfortunately, but I might get back in almost at the point I sold, actually. Nope, I had my chance. I sold about here originally, and I told people I would sell here if I had any more. I might pick some more up. But anyway, I do not own this asset right now. So I'm on the 4-hour chart here, and I'm going to zoom in on all of this upward movement. And as you can see here, I want you to visualize this, like without even looking at RSI way down here. Just imagine a relative strength. And relative strength is, for example, going to the gym. You start bench pressing. The first 3 are easy, so your strength there is very strong. You're pumping the crap out of it. Your next 3 are slower and harder. So therefore, even though you still got the second set of 3 without resting, right? So you did 6 total, but the second 3 you did slower. So your strength of those 3 relative to your first 3 is much lower, right? Which in crypto or any price movement means this is your first 3. You did them really well, really fast, no problem. But your next push up, you also got 3, but your strength relative to how strong you were in the first 3 is much lower, which means you're running out of gas, right? So that's essentially what I'm focusing on here, and then I'm going to show you on the RSI. So I'm going to go to the 4-hour RSI. Let me mark off where I need to be looking at this. Somewhere between here and here. Okay. There it is. Okay. So was Verasity making highs late April? Not quite. So that high is here. Okay, that's the high. All right. So as you can see here, let me, so this is the RSI of the 4-hour chart on Verasity. And the reason I'm showing you this is because this is easily what Bitcoin can do. Look, one mountain of 4-hour RSI, a second mountain, which is a lower high, so it's a downtrend, but it made a higher high. It made an even higher high on this one, and an even higher high on that one, because I circled this one because that's where the price was its max. All right, this is its all-time high. And look at the strength relative. So here, this is like being a bench presser or a weightlifter or just a noob going to the gym, whatever. You can be anybody, but you're bench pressing. And you do something where you can do 12 reps, so you can push it up 12 times, right? So if you have 1, 2, 3, 4, you split it into 4, you pushed it up 3 times, you pushed it up 3 times here, you push it up 3 times here relative to these peaks, right? So what I'm looking at are these peaks. Let me make this chart a little more clear. So I want to show you that there's a darn good case that Bitcoin makes another pop up here. So you did 12, you bench pressed, and you did 12. But as you reflect on those 12, you realize that the first 3, embodied by this, you did them very easily. The second 3, yeah, they're still kind of a breeze. You know, you did a good job. You didn't slow down too much. Okay, from 7, 8, and 9, that set of 3, look at the relative strength. You were really struggling, okay? And so after those 3, you knew you had a couple more, maybe 1 or 2. So you hold the bar up. You're getting pretty tired. You just did 9, and you only thought you were going to do 10, let's say, right? Because you're one of those people, I just do 10. I put the right weight on to do 10, right? But you rest for, take a few breaths, and then you pump out 3 more. Barely. You struggle. You don't need a spot, but you did it. And it was very difficult to get those 3 out, as opposed to the first 3, it was very easy. So your relative strength is way down here, but you did 3 more, which means you made a new high-end price, right? So April 17th should be the ultimate high, April 17th right here. So you see how this height is the weakest by far push, but it squeaked out a new high. And so Bitcoin relative to this is only here. Bitcoin could easily go 50K, 51.2, and then correct. Easily. Because the 4-hour chart, although playing the 4-hour chart bearish divergence, it takes multiple tries to catch the big move off of playing the 4-hour chart, right? So sometimes you'll get lucky, and the first time you play bearish divergence on the 4-hour chart on Bitcoin, you get a 20% move, you make a lot of money. A lot of times, like for example, I will critique my own trading, partly because I went to Mexico and lost internet connection, and I didn't realize I was going to lose internet connection because I didn't even plan on going. But I was starting to short here and here, and it was off of the first wave. So look down here where I'm circling. It was the first mountain, and I did have 3 full strikes of bearish divergence. And so I planned to sell at about 36.5. It never got there. So once price started closing above the 4-hour 10 EMA, I should have realized, you know what? That was just on the 4-hour chart. It's probably not going to play out a big move, right? And I actually tried to take my profits, but I didn't have connection. So on the 4-hour chart, sometimes it takes mountains instead of just 3 strikes. So each mountain has 2 to 3 strikes. This had 2 strikes, and the next one might have 3. And so, so sometimes on the very first try, though, you do get that 20% move, and you caught it just by playing 3 strikes of bearish divergence on the first hump of 4-hour stuff. But usually you want to begin taking profits if you're using the 4-hour chart and you're shorting or longing off of divergence of bullishness or bearishness. You typically want to take like a 10% move and take most of your profits, if not all, maybe even 8%, or take some profits at 6, some profits at 9, some profits at 12. If 12 is never hit, cut your losses and market sell out of it, take your money and run. So as you can see here, this was a 12% move down. Exactly. So I knew that off the top of my head, and I didn't measure this earlier. So critiquing my own trading, my goal from a horizontal standpoint and a structural standpoint was 36.5. But just rattling numbers off the top of my head, because I've done this so many times, one of my failures in that, besides not having internet connection, but I still wouldn't have sold at the right price. So there was still a failure. Even if I had, I probably would have barely taken profit. I probably would have gotten out about right here, or barely, like I probably would have gotten out about right there if I had connection. But one of my failures was I know these basic rules, right? So if you play out the 4-hour chart, you take profits on smaller moves. You don't try to hold something for 6 months off of seeing something on the 4-hour chart. You don't do it. Sometimes it'll turn into that. And those are the times where 1 or 2 trades a year will make you most of your money. Absolutely. It happens. But you need to take most of your profits at a much smaller level, similar to what I just rattled off, right? So if you're playing the 4-hour chart and you see a Bitcoin 10% move, you might want to take most of your profits. And especially at 12%, that's when I would be fully out, and that's exactly what happened. And I said those numbers without even measuring, just because I've done this so many times. And so critiquing my own self, so you can apply this to your own trading. A lot of times, doing the very basic things, right? Even though there are tons of basicness, right? So there are so many basic things in trading, but when you overlook something super basic in trading that doesn't align with something else that's basic in trading, like a horizontal, right? So I thought it was going to come down and hit this, or about right there, 36.5. I was going to hit this. I really thought it was going to. Okay, that's basic. That's a horizontal. But it's also basic that the signal down was on the 4-hour chart. So take your profits at 10%, period. And I didn't do it, right? So I wanted to kind of give you that rule of thumb. And that's pretty similar to my rule of thumb that most of my community members on Patreon know extremely well. is if, and it works out beautifully, and it worked out exactly for Bitcoin. After all the times I said, Bitcoin's moving like an altcoin, Bitcoin. And I didn't follow my own basic rule and I got burned, but not too burned, but I got a little burned. But the basic rule is if an altcoin goes on a massive pump, right? Okay, so let's say massive pump 1, massive pump 2, massive pump 3, massive pump 4. So 4 different assets do 4 different things, and these are all different pumps, let's say. Okay, so let's make this one blue. This is another general rule of thumb, just to show you how easy trading can be. But you just can't ignore the easy. Like you have to you have to take your profits on it. All right, so yeah, 4 different assets. So let's say this one went up 1,200%. This one went up 590%. This one went up 380%. And this one went up, similar to BPRO's initial run up to 0.008 where I sold, let's say 230%. So altcoins do this all the time when the market's getting hot. When Bitcoin is strong, especially when Bitcoin is strong after making all-time highs, altcoins do this all the time, right? That's why it's so much better during altcoin season to not even use leverage, just trade altcoins, because it's better than leverage. You'll actually make more money doing this. However, the rule of thumb is this. When you get to 1,000+% run, once you see compelling bearish divergence, either on the 4-hour daily, so if the asset is young, like Trias, okay, Trias it does not have much price history. It came out in 2021 or 2020, something like that. You would not want to use the daily chart. It's too young, probably the 4-hour chart. So when you see 3 strikes of bearish divergence, you might want to start selling some, maybe at 10% of your Trias to try to buy back lower, with the idea that it could pump 1 or 2 more times. Then if you get another pump, maybe sell 15% of your original amount, which means now you have sold 25 total. And if you get that third wave of 4-hour RSI EMA, so like I have written down here. So if you get the third hump, then sell another 15%. Okay, that's a total of 40% of your backs, for example. But if the run ends up in total, once you finally realize, yep, it's heading down now, even though I've sold 3 times, I didn't sell the top. I actually only sold the top with a tiny portion of what I sold. You can expect, if it's over 1,000%, you can expect a 55 to 60% move down almost every time on altcoins. Rule of thumb, every single time. Very few exceptions or more. So the higher this number is, the bigger the move down. If it goes up 6,000%, you can expect 90% down easily, just like BPRO. Yeah, Verasity actually kind of broke my rule a little bit. It did something like 8,000%, and it only went down 70%. So it kind of fell within this. But the higher you go, the lower you go on the correction. I think Verasity did like 75%. So it actually stayed pretty strong relative to BPRO. But the rule of thumb is 1,000+%. Easily 55% to 60% move down. If you do something just over 500% to 1,000, so between 500 to 1,000% up, just lower these numbers a little bit, 50 to 55. And that's when you would want to buy back. Even if you didn't sell the top, I would measure from the top, and you sold, just a little bit before the top or way before the top, but you can buy back much lower as long as you just hit buy once it goes 52.5% down. If the run were between 500% and 1,000%. For something between, let's say, 300 to 500% run up, okay, you're going to be looking at about 50%. And something between, let's say, 100 to, I don't know, even 300%, I would be looking for a 45%, I would say 40 to 50% move down. So that's the rule of thumb. Depending on how big of the run, so this one here, this one here, this one here, and the smallest one there, okay? Now let me go to Bitcoin and show you how this rule of thumb would work out. Okay, so kind of remember these numbers here, as busy as this may look. And I kept saying, and another critique, so that critique of my trading is sometimes I forget the very obvious things, basic rules that I make for myself, basic trading rules. And I start focusing on something that I shouldn't be focusing on, and I forget the other basics. So watch this. Let me go to the 2-day chart just to make it easy to look at here. And so I typically don't measure from the bottom. I would measure from the gas station, like right here. So I wouldn't measure from here, but from here to there, that's it. That's so almost 1,000% move. So what was my rule of thumb for moves between 500% to 1,000%? What did I write? 55% move down, right? And if you go back on my videos way before the Bitcoin downturn, I did the same exact rule of thumbs over and over in my altcoin videos, stressing to people. And before the downturn, I was saying Bitcoin is acting like an altcoin, right? So I'm critiquing my own self here. So connecting those two very simple dots. Bitcoin is acting like an altcoin. Altcoins correct this much when they go up this high. I should have been holding a lot more tether to buy back when Bitcoin at least goes down 52.5%, somewhere in between 50 and 55, right? But the goal is about 55 if you go between 500 and 1,000% run. And again, I did not measure from the bottom. I measured from like a point of control here, right? So this is like a fair assessment of the run, not counting weakness for strength, because if I measured from the bottom, that makes Bitcoin's move look extremely strong, but I won't count its weakness for strength, right? That almost doubles its move. No. I'm not going to count its weakness for strength. I'm going to X out the weakness, go back to a point where it has a horizontal, and blew up from there, right? So that's how I measure. And so let's see how far Bitcoin went down. Another example of how I failed, on a personal level, to follow very basic trading rules. Yeah, 55%. Trading's, honestly, folks, trading is so stupid simple that it makes it hard, because you want to make money and your brain wants to click. And it's thrilling when you make money and emotions get involved, adrenaline. I can't come up with acetylcholine or whatever. The feel-good stuff, probably not oxytocin, but what's the acetylcholine? I don't know, I'm coming up short. Anyway, you get a flood of emotions, right? And that's what makes you, when you're winning, to ignore basic rules. When you're neutral or losing, you have a different, either when you're neutral, you're bored, you just want to make something happen, therefore you're going outside of basic rules and you're over trading, right? So there's, and I'm going through the processes of making bad trades and how it happens in your head. So when things are boring, you overtrade because you want to make something happen, even though people like me were warning against to everybody, this is choppy, it's hard to make money, be very careful, take profits often. A lot of people lost a lot of money here, right? Not even in the downturn. A lot of people lost money getting washed out in this. And that's boring. And so the boringness will make you click and make you not follow very simple rules. But when you're at a loss, well, you want to make up for those losses. Therefore, you want to create opportunities that do not exist. You overtrade and you more aggressively trade to make up for what you just lost. And you're not following basic rules. And so those are the three general ways that you are your greatest enemy in trading, because trading is honestly as stupid simple as what I just showed you. It just requires patience and not clicking around and not trying to create opportunity where there isn't a rule. Just follow rules, right? And so in my altcoin video, I showed you different things that now that the bottom seems to be in, which it might not be in, but I would say 90% certain. Last time I said 90%, I ate my words. I take that back. I'm not saying 90% ever again. There's a pretty high level of certainty that the bottom's in, but now that the bottom appears to be confidently in, I'm going over, all of my mistakes from a psychological level and just from a basic rule level of everything I did wrong from here, right? And so I did a lot of that on my last video. I gave you a little bit more tidbits here. And I just want to show you that don't overtrade. Just follow simple rules and you're probably going to be extremely profitable. All right, so let's jump back into Bitcoin. Sorry, that was a was an important tangent, but I needed to go on it. I haven't done these types of videos in a while, so and I think the market's getting ready to heat up, so I would like to try to save people from buying coins that YouTubers talk about after it goes on a 3,000% run and then get screwed. So anyway, so the 4-hour chart. So again, going back to business here, what I'm going to try to do in the rest of this video, wrap this up hopefully in 15 minutes, is we have 3 arrows here, up, up, and 1 down in the middle. So these are your 8 and 12-hour time frames, which say correction of some sort, maybe a small one, especially because these are up, right? The correction might be over, but 8 and 12 hours says there's a little bit more correction to go. But 1 through 4 hour say up, and daily through maybe even monthly. I would say weekly, especially though, these are saying up. So there's a interesting disagreement, and the reason I'm going over this in such detail while adding in my mistakes is because it's going to be easy to make a mistake in this. And when you see this type of disparity in what signals are up, what signals are down, I don't know which way it's going to go, but I want to trade, I want to create opportunity. This might be among the best scenarios of a no trade situation. This is one of the trickiest ones possible. It's much easier to trade when, especially the larger time frames have been just turned bearish, but fully, come down. The weekly Stokes and RSI are down. The daily Stokes and RSI are, freshly down, but in the middle. This is freshly down, but just moving down. In the 4 hours bullish. Well, those are your shorting opportunities. So that type of disparity without any of this crap in the middle, those are the perfect times to short, especially if you get fresh bearishness on these 2 larger time frames that say down and the shorter time frames are saying up. Well, just wait for a little bit of bearish divergence and short that, buddy, because these are going to overpower it, especially if they're freshly new. However, in this case, though, these are freshly up, okay? And they are at major resistance levels where historically things get rejected to where this arrow turns the other way on a dime. As the up arrow is being supported by the smaller time frames. So in charting, I would absolutely be bullish off of these 2. However, historically, the historical information is supporting the evidence of here. But as I said earlier, I think in my other video, I said trade what is until it isn't. Right now, what is bullish. So trying to trade a reversal off this, I mean, like I stubbornly tried to do. I absolutely am stubborn about that, and I tried to do it, and I should probably do it much less in retrospect. I mean, not in retrospect, but in a self-analysis respect. Right now might be a pretty good no trade zone, or a time to begin taking profits if you have taken positions, somewhere when Bitcoin was under 36K. If you bought altcoins or longs or whatever, now would be a time, I would say, not financial advice. I'm not a financial advisor. Pokemon cards, taking 50% profits on your Pokemon cards that are in profit right now, it's probably a wise decision, and holding some Tether, or actually I shouldn't say Tether, holding some type of stable coin or US dollars instead of crypto right now, waiting for a downturn, a potential downturn, would probably be wise. So I would split, and my bet, I would take half profits of what I could do now if you're in profit on altcoins, whatever. However, I wouldn't be actively trading for more upside or trying to short for more downside right now, but rather just taking profits of what I have now. Okay. Now, if I were forced to trade this, all right, I don't know what I would do. I would probably short Bitcoin and long Ethereum at the same time, and then let whichever one goes farthest stop me out, so I'm just in the other position, because I don't know which way things would go. So if I was forced to trade, I would take one long on either Bitcoin or Ethereum, and then the opposite position on the other asset, either Bitcoin or Ethereum. Set my stops so that when naturally price continues in one direction, the losing position is out of a trade and the winning position is still in a trade, and then I would take profits after 10, like maybe 8% or so. All right. Because I really don't like this is kind of a no trade zone. All right, so let's go to the 12 hour. So Bitcoin is following pretty well the 12-hour chart in terms of the 10 EMA. So when Bitcoin's below the 10 EMA, it has a good chance of continuing going down historically from what I've been seeing. However, when it has gone under the 10 EMA, it's found a bounce point and bounced from it. Okay, so let's take a look. Let me go to a cleaner chart here. Yes. Okay. So I'm on the 12-hour chart. I'm going to remove all EMAs but the 10. And I'll keep the 55 and... Did that bounce off the 89 perfectly? No, it did not. Okay. So you had an EMA golden cross on the 12-hour. This is the 12-hour chart. This is not a textbook definition of a golden cross, right? So you had the 10 EMA cross above the 200 EMA, got a nice pop out of that, came back to retest that cross. And as you can see here, it came back down and it did not allow the red to uncross. Look at this, right? So let me get rid of the 55 here. So you can see here, price went above, came back down, below here, came way down here. So put price back on. See how low price went? But it moved right back up before this could cross. So it was essentially a fake out. Or just a normal down move with a lot of strength, and it picked up before this bearish cross could happen. All right, so in this case, on the 12-hour chart, Bitcoin did recover after going below, and one of your biggest indicators, similar to the 4-hour chart, but once Bitcoin starts closing back above its 12-hour 10 is typically when you're going to get another move up. So, and it's just that simple, very simple trading rule. And Bitcoin is following this 12-hour chart really well, and I'm going to show you here in a second. But if below, bad. If above, good. Even though you can go from bad to good really fast, still that's how you need to interpret it, because this 10 line on the 12-hour chart is kind of like a boss line for Bitcoin right now. So if I put price back on, close below, bad. Is this tradable? Absolutely. How nice of a move could you have gotten off that? Just trading from there or trading the first wick above. Okay. 6% move. That's totally tradable, especially on altcoins. If you could short things. Now, here, it closed below once, closed at, closed below, and the next one had a power move. So if you were in a short position right at this close, all you had to do is put your stop right there above that candle, and you're out of your trade, and you can flip right to a long position because you know if it goes back above the 10, then that's good. So right now, what you have going on here, with a little bit of waning momentum, as I showed you earlier, closed at, okay, closed above, and it's getting a little weak. So it's coming back down to test it right now, but it has not closed below. So this closure was above. This closure was above. You have no closures below since this move. But here's the thing. Here's why I say the 12 hours showing signs that now is time for the correction. With the exception of this. That looks pretty good. Nope, Stokes are saying it might actually make a move back up. So Stokes are not saying, but RSI is. So let's take a look at RSI on the 12-hour. So again, simple trading rules, right? When you get a second rejection from the moving average, which is the white line, so this is the 12-hour chart, Bitcoin RSI. It fell below, got rejected once, came back up to test it a second time, 2 rejections. Bitcoin does not have a good historical record of making another push after that scenario. So let's go back and just look at this chart and go back in time and look for that second rejection and see how many times it just pumped after that. I think it might be 100% of the time it's come back down and hit this white line at least. So let's take a look. Which might not be that big of a move down. It could only be like 41K. I think the 12-hour chart could hit this line if Bitcoin hits 41K. So it might not go very low. But, so second rejection, let's take a look. 1, 2, second rejection, hit the red line. No rejection. This just tanked. This was stupid. Like, look at like that. That's very hard to trade. There's no bearish. Gee whiz. That had to have been the drop, no? That's coordination right there. That doesn't just happen. There were sellers coordinated together to sell Bitcoin there. That's stupid. That's pretty aggressive. That's not extremely common. Usually you get more of a signal to sell, but yeah, that was a hard top. What was that top? February 20th? Yeah, that was a hard top to sell. Wow. I didn't notice that till now. Wow. That would have been hard to get into the trade to the downside. My goodness. All right, anyway, back to the RSI. That was stupid. So you could either count this as the second rejection here. So first rejection, second rejection, or the second rejection here. I would count this one. And it went down past the white line, hit the red line. Second rejection. Here it had no rejections. It just hit the red line almost. Okay. All right. Here, so it's not 0 times. So you did have 2 rejections, 1 more, actually 2 more pushes up. So let's take a look at this. Late October to the top in November. So actually it has happened. And it was above the green line. So partly why this was able to do that is because RSI was able to posture. See this dotted line right here? So I guess Bitcoin can use this as support. Is it doing that now? No, it's not. So see the difference here? It's not above this green line. So the chance of it actually doing this is pretty low because it cannot use some horizontal here like this, the bullish control zone. So the posturing is quite a bit different. However, it has happened in the past, but it was totally different posturing above the green here. So RSI was in the green zone. Anyway, first rejection, second rejection, 1 pop, 2 pop, bearish divergence, 1, 2, 3 strikes. And I bet price was going like this as RSI was going down. So let's go to this time frame and see what Bitcoin could do if it did something similar. It's a big move. My God. Sorry to use religious names in vain. I didn't mean to do that. Looks pretty similar, huh? However, the reason I don't think this last pop to 51K will happen is because it's out of the bullish control zone. I really don't think it's got the folks, but it could. All right, because it's done it before when 12-hour RSI was in the bullish control zone, but it's not right now, and it's losing its 10 at the same time. I don't know. I think it's going to come down to here, at least 40K. But let's keep looking. So big pop up, first rejection, second rejection, under the bullish control zone, down to the red. Okay, so 18th of May is the second rejection. Let's take a look at the, I'll just mark this where I was. 18th of May. And see what type of down move we got. Not a very big one. This was a consolidation phase, so this is actually what might be happening in Bitcoin. You might not get a very big move down, folks. This might just consolidate around the orange line, around 40K, and just keep going. Yep. Maybe down to 38.9 according to this. So I had to stretch this out just a little bit because Bitcoin was a smaller asset then, and price movement's a little bigger here. But so that means my target about 41, about 40K. So let's keep going. Either way, downturn is very likely here, is the whole point. So stretch this out a little bit, and big pump. One rejection. This is why you wait for the second rejection. Bam, no second rejection. Made a big pump up, right? So it would actually count. I don't know if I'd count that. I would call this the first rejection, that the second rejection. So, and it's out of the bullish control zone. See this green line? See how this is all green, right? Second rejection went way down, and that's coronavirus, so that's not quite fair. So let's just count it down to here. 24th of February, 18 to 24th. Not very much. I don't know. The 12-hour chart's actually, it's saying small downturn, but it looks like Bitcoin's going to consolidate above 40K, folks. I was way too bearish, way too fast. So that was this one right here. Okay, coronavirus dump, but I only took it to here. All right, another one. He didn't really, this was kind of pulling out of the bear market, so this stuff is not quite the same. All right, let's do here. So right now I'm in the land of 2019 when Bitcoin was pulling out of its $3,200 lows and screaming up to probably 14K right here. 1, 2, 3 strikes, maybe even here. This might have been 14K, I guess. June 25th, if I had to guess. Yep, see that? Bam. I can tell from the RSI. See that? The third strike of bearish divergence. See how I did that? Watch. 12-hour chart. I see 3 peaks going down in a row. Usually the third peak, one strike, 2 strike, 3 strikes. The third one is the highest high. It just happens. I don't know why. And that's why I was able to tell you June 25th was probably the 14K top. So being patient for that third strike is pretty hard. And that's why I was saying earlier on the 4-hour chart, that's why you take your profits within 10% or whatever, because the likelihood of it doing all over again 2 and 3 more times is very high, right? You typically want to wait to that third mountain on lower time frames. But you had 1 rejection, 2 rejection, hit the red line. 1 rejection, 2 rejection, small pop, which could be Bitcoin to 50K, and then hit the red line. That's not a rejection. 1 rejection, 2 rejection, small pop, hit the white line. So this could also be 50K. So it does do it quite often. I guess 50K is kind of baked into the 12-hour chart here as a possible. So because the small time frames are saying it might pop up, 12 hours saying, you know what, that might be a probability, because it's kind of 50-50 looking. Either it gets one more pop up or it doesn't. But regardless, it'll probably end up hitting this red line on the 12-hour chart, and that's probably when I'll buy back. Is when it touches this red line, just like it did here, 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 here. That's when I'll be buying back personally. And taking, if I'm in shorts, then I'll be, getting out of my shorts probably even before then. And I'll be taking long positions somewhere around that point. So 12-hour chart is saying it might be 50-50. Kind of. So maybe it's not such a big down arrow on the middle, kind of like I was talking about earlier, up, up, down. This middle arrow actually might just be more like neutral, which leaves up and up. Oh, I don't know. It's kind of looking like it's going to pop again. All right, let's go to the 8-hour. No, this is the 8-hour chart. Shit. Let's see here. So the 12-hour chart is going to be very similar. All right, so let's take a look at the 8-hour chart on the EMAs here. Are we getting closures below that 10? We are. Okay, so what I would be looking at on Bitcoin here, I would be flipping back and forth between the 8 and 12-hour. 8-hour is below. So if this 8 hour and 5 more hours, so see on the right hand side of my chart, it's counting down 53 seconds, 13 minutes, 5 hours. If it closes above, it's the chance of it hitting 50K plus is pretty high, or at least 48.6 or something, just a slightly higher high like this, hitting 49K. Probably hit a trend line. So if this closes above, it's probably going to make another push. If it closes below, then I would flip to the 12-hour chart, actually, which is this, it closes on the same, actually. That means this is probably going to close below the 10. So I would be focused, taking price off on the 12-hour chart, 10 EMA only, and the 8-hour chart, 10 EMA only, and I would be flipping back and forth. And if price closes above just one of them, right? Or both, if price closes above the 10 on both, I think you should be in long trades if you're planning on trading, looking for one more pop up. If price closes below both of them, I would be looking for a down move to at least a 10% degree, from maybe 15 from the top. Oh, maybe even less. Yeah, no, close below. It'd probably be equal to this. So if it closes below both, I'd be looking for at least a 12% move, maybe slightly bigger. Let's say 15 down to the 200, bam, 16. So I'd be looking for the 12-hour 200 EMA to be hit. And that's at 39.8, increasing. Now it's at 40. So just, by 3 days up, it'll be at 40,600, for example. So it's going to be on this line. So now, if it closes below the 8, but above the 12, okay, then I would just wait to see what the next 8. I would just flip to the 8-hour, the smaller time frame, to see if the next candle gets above. So you have 3, possibilities in terms of looking at 2 charts, the 8 and 12-hour chart. You have one possibility is price closes. So this is the 10. You have a double closure below. On both charts, it's below the 10. That's one scenario. Another scenario is they both close above, which honestly I would get bullish and look for 49K at least. Or you have one above, or one below, one above, for the third scenario, in which I would then, if this happens, I would just flip to the 8-hour chart and be poised to take action depending on if price posturing to the 10 changes. If it then goes above the 10, I would flip bullish. If it stays below the 10, I would stay midterm or very short-term bearish, at least for like an 8% move. So this is how I would be interpreting the Bitcoin chart. 8 and 12-hour charts, this is what I would be looking at. Now, let's take a look at Ethereum real quick. There's a thing. Yeah, Ethereum is already close below. Jeez, this looks really overextended. I don't know. Ethereum chart's saying this is going to move down. I'm pretty sure. Yeah, you got 3 rejections on the 8-hour chart here. 1, 2, and you're out of the bull. Yeah, this is going to come down. I don't know. Ethereum's saying it's coming down, which will probably drag Bitcoin down too. It might not be that big of a move, but Ethereum is absolutely so out of the bullish control zone after a big move. So after a big move and the 1, 2 rejections below the bullish control zone. So I'm going to actually take a look at this. April 2nd to April 7th. This would be a small correction. I'm interested to see what this would equate to. So the 2nd to the 7th. Let's take a look. %10 move. Folks, this might just consolidate. Wow. I think I'm way too bearish, folks. But that's the whole point of a bull trap. If this is a bull trap, that's the entire point. That's why it just feels like a no trade zone. It looks like it's going to come straight back down here and just consolidate. Almost like it almost looks like it might make one of these moves, kind of like Bitcoin did twice in 2020 before really ramping up. I think somewhere between 9 and 11K, and then between 10 and 13K, it made 2 similar shapes like this, like that. So it kind of like almost looked like a duck bill, like quack, right? So, quack, quack. It kind of made a duck-looking bill shape, a duck head with a duck bill. A very good form of consolidation that, honestly, it looks like what these are going to do. Ethereum might not go back below 29.7, which I have to take a loss on that if that is actually what happens. It might wick down to here, though, down to this area. I would actually say this. In a healthy consolidation, Ethereum's only going down to 28.70. Okay, so I changed my assessment. You have short-term time frame saying up, long-term time frame saying up. So 1 to 4 hour up, roughly. Daily and weekly, definitely freshly up. 8 and 12 hour are saying correction, but they are indicating that this correction is going to be very minimal. So drawing a very small vector of self-pressure, it looks like this move is not going to be very big to the downside, and then we're going to continue with what the big daddies are saying. So the charts are painting a fairly bullish case right now, even in the midterm. Just a small correction, 10 to 15%, consolidate, maybe go sideways for a while, and then keep moving up without ever hitting the target of 36K, 36.5K Bitcoin. So I'm going to change my assessment right in the moment. I think those down arrows are only indicating a small move down. Before continuation to the upside, this looks like stuff's going to get really bullish, folks. However, I wanted to warn you, though, even though this assessment right now in the charts between Ethereum and Bitcoin is pretty bullish, I wanted to show you, even though I'm not going to show you right now, I've already made a video on this. I'm going to hopefully tag it, like you should see it popping up here. Go watch that video, and I think there should be tags on why this could very easily be a bull trap. This could be total bull trap scenario, and I give you all the reasons why. I'm not going to redo that, so I'm going to tag it right here. Go take a look, but there are major reasons to be very, very, very cautious right now. Even though the raw assessment, not looking at historical values, which I do in the video that I tagged, and hopefully, you might click on here a little bit. Even though the current chart is saying pretty bullish, that's the entire point of a bull trap, which it grabs bulls by the balls and pulls them down, right? It made you bullish. It had all the reasons in the chart to be bullish, but then you get to move down. I show you that in that video. Go check that out. And if you like the content and you're new, hit subscribe. If you do subscribe, let me know if you want to be a cryptonian or a crypto crackhead. I like to know which crypto pronoun you have chosen. And if you're returning, just hit thumbs up. Leave me a comment in the comment section, even if it's you suck, smiley face, or whatever. And just help the algos here during crypto winter-ish. And we'll see you next time.